right, we're going to go ahead and kick it off. A few people are still trickling in, but welcome to those of you that are joining us today and here for our Trends in Bloom webinar, which will focus on the first half of 2025 and highlight some expectations for the rest of the year. My name is Stacy Hughes, and I'm the moderator for today's session. We're excited to welcome you to our very first Analyst Roundtable. This session will focus on key trends and insights across top consumer durables and provide a look at what our category experts are seeing in the market week after week. Before we get started, I have a few housekeeping items. We are recording today's session, so the audience will be muted. We will email the recording within the next few days. While we have time slotted at the end of for Q&A, feel free to post your questions in either the chat or the Q&A tab to the top of your screen. I will monitor both of those. We'll follow up via email in the next day or so to address any questions that we might not get to today. Now, as I mentioned, this is our first Analyst Roundtable, and we have gathered 6 of our analysts to share key insights specific to their categories. That being said, let me quickly introduce the host for today. We have Valerie Aldi-Heyman, who is hosting the session overall and will kick us off by laying the groundwork for what we are seeing in the economy and how that's impacting the insights you'll hear today. Val is joined by 5 of her colleagues and experts in the following categories: Avery Bissett, personal computer; Nick Harpster, tablets; Scott Peterson, CE; Adrian Spear, OPE; and Bryce Texan, major appliances. I'll hand this off to Val to get us started. Welcome.
Thank you so much, Stacy. And as she mentioned, my name is Val. I'm a senior analyst here at Open Brand, and I've been covering printer hardware for 13 years. So let me share a little bit about Open Brand now. Open Brand was founded in 2023, but has been in the business of consumer durables, for over 20 years. Open Brand combined 4 powerhouse companies, including Gap Intelligence and Trackline, in order to deliver the most powerful market intelligence available in the industry. As one company, we're bringing together the most trusted pricing and promotions, market share, and consumer insights data in the business, delivering market measurement and competitive intelligence solutions that power stronger decisions and strategy for our clients. To help clients stay ahead of the macroeconomic shifts that influence the state of the market, we also deliver economic solutions, including publicly available CPI, updated monthly, and forecasting solutions for pricing, retail sales, shipments, and bring your own data.
I'm going to jump in. It seems Val's having an issue with her technology. So let me go ahead and jump in where Val left off. All right. So everything that Val just talked about is what our clients have access to and what's fueling the insights we're sharing today. We've gathered some of Open Brand's top category analysts to walk you through the most important developments we're seeing this season across consumer electronics, outdoor power equipment, appliances, and beyond. Today's session is structured around 6 key areas. First, we'll start with the bigger picture and examine the external influences shaping the market, especially the latest developments around tariffs and how they're already influencing consumer behavior and pricing strategies across categories. Next, we'll highlight major spring pricing and promotional activity, including insights from key events like Memorial Day. We'll explore which brands and retailers made the biggest moves and how those prices and promotions are shifting shopper behavior. Next up, we'll take a look at spring refreshes and how launch activity played out across categories. Then we'll look ahead and share what we anticipate for the late summer and early fall, including back-to-school expectations based on what we're seeing now and how seasonal patterns typically evolve. Finally, we'll open up for Q&A, so stick around to ask your questions and hear what our analysts have to say. Before we get into category-specific trends, let's start with the broader forces shaping the market this season. And
all right,
Val is
Stacey,
back.
thank you so much. So sorry about that. Let me go ahead and take it from here. I appreciate you rolling through the agenda. So why don't we go ahead and take a look at how consumers are reacting to tariff news. This chart reflects from results from Open Brand's daily mindshare survey, where we collect feedback from over 1,200 US consumers per day, totaling over 400,000 responses annually. Starting in March, we began asking consumers directly how tariffs are influencing their purchase behavior. And while the shifts may appear gradual, they're consistent and notable. Consumers are becoming more aware of tariffs, and we're now seeing early signs that those perceptions are starting to impact purchasing decisions. The share of respondents who said tariffs did not affect their decisions has steadily declined from 52.7% in March to 46.9% in May. That's nearly a 6-point drop in just 2 months. Meanwhile, concern is climbing. The percentage of consumers who said they delayed purchases due to higher prices rose from 13.8% in March to 19.1% in May. This represents a clear signal that price sensitivity is growing. And while it's a smaller group, proactive purchasing is also on the rise. Consumers who said they purchased early to avoid future price hikes increased from 9.6% in March to 12.1% in May. What's interesting here is the contrast. While economic sentiment overall remains cautious, the behavioral changes around tariffs are starting to take shape and become more real. So what's the takeaway? Brands should be watching this trend line closely. Even if the impact is gradual, it's meaningful and it's already influencing timing, promotional response, and consumer expectations as we move into the second half of the year. So now let's take a closer look at what categories are on consumers' minds heading into summer. We looked at the categories where consumers say they plan to shop next, regardless of tariff concerns. Among those who did not purchase in Q1, these are the categories most likely to see purchase activity in the next 90 days. First up, lawn and garden. This category leads by a wide margin at 35.7%, which makes sense given seasonal upcoming demand. Consumer electronics, small appliances, and paints or stains also top the list. All of these represent categories where promotional timing and pricing sensitivity are especially critical right now. Notably, major appliances, tools, and outdoor power equipment sit near the bottom, possibly indicating more hesitation as tariffs began to influence price points. So what this tells us is that while tariffs are clearly influencing behavior, seasonality still plays a big role, and there's a narrow window for categories like OPE and appliances to win over cautious consumers. So while we know where consumer interest is heading, the bigger question is at what price? So this brings us to the other side of the equation, how pricing is shifting across those same high interest categories and what role tariffs may be playing in those changes. After several months of relatively soft or even deflationary movement in durables, April marked a turning point, and a big part of that shift is likely tied to the implementation of new US tariffs. Our latest CPI report was just released and showed that May marked another turning point in durable goods pricing as price growth accelerated for the second month in a row. According to the Open Brand Consumer Price Index, prices rose 0.53% month over month, up from the 0.35% increase in April. Price growth was driven primarily by acceleration of appliances, home improvement, and personal care products. Appliance prices, which declined slightly in April, rebounded sharply with a 0.77% gain. Home improvement goods saw continued upward pressure, increasing 0.81%, up from an increase of 0.59% in April. Personal care products reversed course after April's decline, rising 0.56% in May. So these changes reflect more than just seasonal fluctuations. Many of these categories are in direct focus of newly imposed US tariffs, which took effect in April. And as importers absorbed higher costs, it's possible that we're seeing early signs of those costs being passed along to consumers. So now, as the economy enters this new season, so does the market. Let's take a look at what's blooming in spring pricing activity across categories. So Bryce, go ahead and kick it off with appliances.
Thanks, Val. My name's Bryce, and I'm a home appliance analyst at Open Brand. As excited as I am to talk about appliances, I am not as thrilled to report that prices are on the rise. As Val mentioned earlier, the CPI for appliances is creeping up month to month, but we're also seeing prices increase compared to spring of 2024. Laundry prices are leading all major appliance categories with a 6.8% year-over-year increase in prices. And that price point has surpassed $1,000 in 2025. We saw that ranges saw a slight decrease in discounted price. However, across all major appliance categories, the shelf price or the pre-discount price is up across all of major appliances. And this suggests that tariffs may be influencing pre-discount prices, with some costs being positioned to be passed to shoppers later in the year. So those are the price trends that we're seeing in major appliances. How are prices looking for the outdoor power equipment space, Adrienne?
Thanks, Bryce. Hi, everyone. Thanks again for joining us today. I'm Adrienne Spear, Open Brand Senior Analyst for the OPE categories. Back to your question, Bryce. Price increases have certainly become the broader backdrop across categories this spring, haven't they? And unsurprisingly, this is largely due to tariffs. Across the OPE space, leading brands are already acknowledging the impacts of tariffs and adjusting accordingly. Stanley Black & Decker announced price increases in April and signaled that more increases are likely. Husqvarna and Makita are also making changes across supply chains to manage higher costs. Steel was especially direct, saying plainly that tariffs are taxes and that ultimately consumers will feel them. And Caterpillar actually put numbers to it, estimating up to $350 million in added costs this quarter alone. We're already seeing these price increases within pricing data across retailers from brands including Craftsman, DeWalt, and Makita, just to name a few. There's a clear through line here. Cost pressures are real and pricing decisions are being made now. That context helps explain what we're seeing at retail, upward movement in some categories, but with some exceptions. Looking across major retailers from January to May, most handheld categories, including chainsaws, blowers, and trimmers, saw modest price increases, generally in the 2 to 3% range. These likely reflect early efforts to offset higher costs. Walk-behind mowers saw the most significant price increases year to date, with net prices up nearly 11% on same product assortments between January and May. But the picture isn't consistent across the board. Both zero-turn and riding mowers saw average prices decline slightly over the same period. That may point to soft demand, lingering inventory, or competitive pressure at higher price points. So while brands are starting to adjust pricing, they're also being selective. The ability to pass through costs depends heavily on the category and likely even the price tier within that category. Scott, what sort of pricing trends are you seeing within consumer electronics?
Yeah, thanks, Adrienne. And hello, everyone. I'm Scott, Senior Analyst for CE. And what we see across this sector is a mixed bag of ups and downs. Computing categories like notebooks and desktops saw price declines on year of 2.8 and 4.1% respectively, as associated monitors also fell year over year, down 1.5%. Meanwhile, categories that are driving the year-over-year upticks are tablets, which rose 12.2% compared to last spring to reach $935, headphones, which rose 5.2% on year to hit $122, and TVs, which saw an average net price increase of 2.4% to just creep over that $500 threshold this season. Now, looking more into TVs specifically, one of the things that's causing the upticks is the emphasis on ultra-large TVs and mini LED technology, as well as expanded premium OLED and Art Series TVs. Shelf pricing, so the average price before any discounts, the blue line in this chart, rose 20% overall. This reflects that advanced mix we just talked about and the new generation that's just now debuting this season. Spring is definitely the new product introduction time for TVs. Now, although shelf pricing is climbing, we only logged a 13% year-over-year rise in average net pricing, which is the after discount price, really illustrating how much more aggressive promos are being deployed to offset that upward momentum. This is good news for end users and their ultimate purchase prices. Now, smartphones is another large and mature area of the CE market. And the average net price of smartphones from the top brands in the postpaid segment is actually slightly down year over year, showing steady pricing strategies from these major US carriers. We're talking AT&T, T-Mobile, Verizon. And pricing for most major brands in 2025 is only several dollars away from 2024 and 2023. The average net price of Apple's postpaid iPhones decreased by 0.4% year over year in 2025, reaching $979, just $4 under the portfolio it had at these carriers in 2024, really reflecting its measured price position in recent years. Meanwhile, Samsung's average price has fallen steadily since 2023 to reach $897 today, a year-over-year decline of 1%. Its price drops are moderate but consistent, as you can see each year, really indicating a pricing strategy rooted in promotion. And Google's 1% year-over-year drop in average pricing represents its most stable year of change in several years, actually. This minor shift keeps its lineup directly adjacent to Samsung and Apple in that premium sector, because Google's one of the only other brands that can really mingle with these giants in that premium realm. And Motorola now had the largest year-over-year decline in average pricing at 5% in May. And this indicates a move to remain aligned with the budget end of the segment. Sure, it has fancy foldable razors and stuff, but its core competency remains rooted in the value side of the price spectrum. Moving beyond brands and the pricing, it's probably time now for Val to tell us about how promotions are really tied into all these shifts.
Yeah, absolutely. Thanks so much, Scott. So we have really talked quite a bit about the pressure tariffs are putting on pricing, but how are brands actually responding in the market? So let's go ahead and shift our focus to spring promotional activity, focusing on where we've seen a mix of strategic restraint and aggressive moves depending on the category. Looking at key promotional events like Memorial Day, we tracked how brands navigated a challenging pricing landscape and which categories saw the most movement as retailers worked to convert cautious consumers. So let's dig into what stood out this spring. And first up, let's once again hear from Bryce with appliances.
Thanks, Val. In the appliance space, we saw that Samsung and LG aimed to balance these raising prices with increased discounts. Both of these brands increased discount rates on promoted products, while brands like Frigidaire, Maytag, and Whirlpool saw their discounts rates drop year over year. You see that Samsung and LG's premium tech assortment with higher margins makes it easier to absorb tariff costs and balance discounts with rising prices compared to lower margin appliances. So Adrian, what discount trends are you seeing in OPE space?
Thanks, Bryce. We're definitely seeing some of those same dynamics in OPE, though the promotional cadence looks a bit different. Instant savings offers peaked early, most heavily in mid-March, which is earlier than what we typically see in other seasonal categories like appliances. This reflects a push to capture demand during the spring launch period, as well as ahead of expected price increases. During the week of March 16th, we captured the highest volume of instant savings promotions for products from Greenworks, Works, EcoFlow, and Ego. By May, promotions had tapered off, especially on higher-priced equipment. Instead, we saw more activity in lower-priced, high-velocity items like blowers and trimmers. That suggests that early promotions were successful and that brands are now pulling back to protect margin as costs continue to rise. Zooming in on OPE promotions in May specifically, the biggest discounts were in robotic mowers, generators, and leaf blowers. Robotic mowers stand out not just because of the level of discounting, but because they're often marketed as premium. The deeper cuts here suggest slower sell-through and growing competition, especially among battery platforms. Generator discounts may reflect seasonality or excess inventory, and with leaf blowers, the discounting follows earlier price increases, likely an effort to stimulate volume or to adjust softer than expected sell-through. So while promotions were active, they weren't widespread. Brands are being selective, directing discounting to specific products under pressure rather than taking a blanket approach. Throughout the month of May, Greenworks, Works, Ego, and Ryobi were the most frequently discounted brands. Finally, looking at Memorial Day, 3 themes stood out in OPE: bundled batteries, free gifts with purchase, and straightforward instant savings. The first 2 tactics are about adding value without lowering the headline price. A bonus battery or tool helps justify pricing, strengthens platform loyalty, and avoids eroding margin. Compared to earlier in the season, Memorial Day promotions felt more measured. Brands may be holding the line on deeper discounts amid tariff tensions, at least for now. As we move into summer, the key question for OPE is whether this value-focused approach can sustain volume or whether we'll see more aggressive pricing as cost pressures build. Bryce, I'm curious, how have promos been shaping up for major appliances?
Thanks, Adrian. And you mentioned those cost pressures, but at major appliance retailers, we've continued to see instant savings discounts along with bundle discounts. We saw discount rates above 20% across all of the major appliance categories. Ranges, refrigerators, and cooktops and wall ovens even saw an increased discount rate compared to Memorial Day 2024. The major retailers were offering some pretty deep discounts, with Home Depot advertising 35% off on select products, and Lowe's offering up to 40% off on select products. Now that we went over some promotion trends in the OPE and appliance space, let's shift gears to consumer electronics.
Thanks, Bryce. I'm Nick Harpster, the tablet analyst here at Open Brand. Looking at tablet promotions in May, top brands increased their average promotional value by about $15 year over year, reaching an average of $113. Interestingly, though, the average discount percentage actually dropped by 2 points to 15%, suggesting a shift. Larger discounts, but on higher priced items. When we look at the average selling prices during spring, considered March through May, more budget-friendly brands, including Amazon, Lenovo, and Samsung, moved down in average price between $23 and $31. Meanwhile, premium brands moved in the opposite direction, with Apple jumping up $102 to $935 and Microsoft jumping $162 to $1,400. This highlights a growing divide between value-focused and premium positioning within the tablet space. Notably, in 2024, Apple leaned more heavily into its mid-range and entry-level iPads like the Air 5, iPad 10, and Mini 6, with average pricing around $550 to $680. But by 2025, the focus shifted upward. The iPad Pro 7 and Air 6 held an average ASP of $1,600 and $845 respectively, while older, lower-cost models like the Mini 5 and iPad 7 and 8 have largely disappeared from the omnichannel. This shift towards more premium, higher-priced models shows a repositioning of Apple's portfolio. Now, breaking down the promotions from key tablet brands during that spring period of March through May, we saw all major brands, excluding Microsoft, saw an increased average promotional value. This was seen with Amazon, Apple, Lenovo, and Samsung all increasing their average promotion values from Samsung's $9 increase to Apple's about $15 increase. Microsoft still holds the highest promotional value of $270, despite a $43 dip year over year. Despite seeing these older models trickle out of the retail channel, some of the most aggressive promotions featured on Apple were its older iPad Pro models, with some of the deals including 47% off the iPad Pro 4 at Best Buy, or $700 or 37% off the iPad Pro 5 at Best Buy. So while we're seeing these older tablet models have these large promotions to help clear out inventory in this spring, a similar story appears to be unraveling in the notebook space.
Thanks for getting us started with computing, Nick. I'm Avery, computing analyst at Open Brand, primarily covering notebooks and desktops. Between tariff uncertainty and 2024 spring refresh timing, the notebook category has seen a volatile first half of the year. Yes, there have been tariff price increases on newer consumer models and gaming notebooks, particularly at Best Buy, but promotional dynamics remain mixed. If we're looking at key notebook merchants, Amazon, Best Buy, Costco, Walmart, in-store discounting has been elevated in May, mostly due to exiting placements hitting clearance. Amplifying this is that in some cases, Open Brand has tracked a decrease in discount volume and frequency, which increases the impact of that end-of-life discounting on the overall channel average. Online, however, it's a different story, where we've seen discounts taper off this year. The influx of new debuts, particularly gaming models that have seen tight supply and limited discounts, have contributed to this trend. This channel has also been more nimble in reacting to tariffs due to its traditionally more dynamic pricing and discounting. On that topic, we've generally seen merchants maintain their discount dollar values, even if they've had to increase shelf prices anywhere from 5% to almost 15% to offset higher production costs due to tariffs. This has been done in many instances with the added cushion of higher inventory levels to start the year after the channel stockpiled in Q4. And, of course, I can't talk about this year's back-to-school season without mentioning Chromebooks. As one of the most price-sensitive segments for both buyers and sellers, it's seen shelf price increases from every brand's Chromebook portfolio. And when it comes to discounts, Chrome has seen a more noticeable decline in discount averages since Q1 than Windows.
So to follow Avery's talks on discount dollars, I want to circle back actually to some of what Val opened us with in today's webinar, tariff sentiment. Specifically, what can brands and retailers do to make consumers buy earlier? And 54.3% of our respondents say don't underestimate the power of a good deal. And TV brands are out here doing their darndest. New 2025 flagships are debuting in the market with great deals, many up to 45% off. These are new devices that can't miss prices. And speaking of the buy one, get one crowd, Sony's got the BOGO going on with a free 55-inch TV with purchase of a more advanced one, and Samsung's giving away a free projector with its Neo QLEDs, all perfect demonstrations of this form of value add. We even heard Adrienne touch on this in some of her OPE slides. And this is showing how we're just leaning into these dependable promotional triggers to motivate buyers. And I mentioned promotions were strong this season. Here's how they're trending for TVs. Average discounts are up 5 points year over year to hit 26% off, and average promotion values are up 33% on year to reach $614. This makes today a great time to buy TV. And if we trace these discount trends backwards in the screen here, we can see that 26% and 27% as the discount averages for some of this year's key sale events, basically 1 to 2 points up from the overall 2024 holiday season, literally Black Friday level pricing out there. So let's take a look at who's actually driving this now. Here is a trend of the discounts by specific brand. You can see how aggressive the Chinese manufacturers are being. Super Bowl and Memorial Day had stronger discounts this year, basically 1 to 2 points higher. And let's trace some of these lines. A lot going on here. But TCL is the pink one. And they really accelerated their discounts from Black Friday and peaking now at Super Bowl. TCL is, of course, the official NFL partner. Hisense, which is the lightest blue line in this trend, saw its discounts rebound after the holiday season in March and April, making sure that it was set up to sell ahead of the tariff scares. And I really want to end this slide just by pointing out that this activity is actually making us hover in a higher percentage range bracket this year. You can see from prior cycles, at this time of the year, our spaghetti clusters are usually in the 10 to 20% range on this graph. This year's mix now is hovering in that 20 to 30% range for TVs. And now going back again to that intent to purchase questions from our tariff survey, this time for smartphones. Great deals and discounts and BOGOs are pretty much table stakes for this category. We always got those going on. But we're getting a boost to is one of the key ways that smartphone savings are issued, trade-ins. And major brands like Apple, Samsung, and Motorola are temporarily boosting and broadcasting extra trade-in values this season to get you into your next handset quicker. So wrapping up the CE promotional stuff, I once again would like to reference our tariff sentiment survey results. Here we asked what brands consumers are still considering in the near term, and the big takeaway here is that it's all about the big ones. Today's top TV brand, Samsung, tops the list, so does Apple, the top smartphone maker. So this seems rather safe, stable, and perhaps comforting to stick with my regulars. So Val, please take us deeper into this season that we have at hand.
Yeah, for sure. Thanks so much, Scott. A lot of great insights there. So now that we've seen how pricing and promotions have played out this spring, let's switch gears once again and take a look at what's sprouting in terms of product refreshes. Spring is typically a key moment for product refreshes, as many of us know, and brands roll out updated models ahead of the summer and back to school seasons. But this year, the pace and volume of launches varied widely across categories. So let's take a look now to see which markets brought something new to the table and where we're still waiting for momentum to build. So let me kick it off by taking a look at the state of spring printer launches. So far, it's safe to say that things are quieter than usual. Through the end of May, only 31 new printer hardware models were released in the US across both business printer and personal and Soho printer categories. And while that may sound like a decent number, it actually marks one of the slowest spring refresh periods we've seen in recent years. So here's how that breaks down. On the business printer side, all 11 launches came in Q1. Nothing new introduced in April or May. The last major launch was HP's LaserJet Enterprise 8000 series, which was introduced in March, but didn't start rolling out till weeks later. On the personal and Soho printer side, just 14 models have launched through May. That puts 2025 behind both 2022 and 2023, which saw 23 and 28 launches respectively by this point in the year. So despite the early momentum we saw, spring is stalled. This suggests that brands may be holding back refreshes for strategic timing later in the year, possibly aligning with back to school or early holiday cycles. We're also watching really closely for potential movement in HP's entry-level LaserJet lineup and Epton's EcoTank portfolio, both of which could see activity in the coming weeks and months based on both historical refresh cycles and channel activity. So how about you, Nick? How's this playing out in the tablets market?
Thanks, Val. As for what we're seeing in the tablet space in terms of a spring refresh is actually a healthy number of models seeing replacements, but with the more budget-friendly series taking center stage. Now, the question is for the refresh tablet models is, are consumers paying more in 2025 than in previous generations? Starting with Apple, they've held their prices steady. This is notable in today's market, with the iPad 11 keeping the same price tag as the previous generation, but Apple doubled the baseline storage, which adds value without increasing the price. It is worth noting that technically the iPad 10 debuted at $449, $100 more than the current iPad 11. The iPad Air also stayed firm at $599 for its entry-level 11-inch model. So while the prices didn't go up, there is a subtle upsell strategy happening with the added SKUs. On the Android side, Samsung's Galaxy Tab S10 FE series did see price increases. The S10 FE and S10 FE Plus both saw $50 increases across the board, which is a trend we've seen for the FE models creeping up in price. While it doesn't shift them out of the budget-friendly space, it does continue to move them further away from it. Over on the Windows side, the Surface Pro 11 continued with some interesting price dynamics. The new 2025 model starts at $799, which is actually $200 cheaper than last year's $999 base model, despite still featuring the Snapdragon X Plus chip, 16 gigabytes of RAM, and 256 gigabytes of storage. So what's the trade-off? The lower price model has a smaller 12-inch display with lower resolution and refresh rate. It also drops from a 10-core to an 8-core CPU, but gains 2 hours of extra battery life. So while you're spending less, you are making a few compromises on display and performance, but getting better energy in return. Next up, Acer's Iconica V11, priced at $229, which is about $50 to $80 higher than the previous A10 model, which was released in August 2023. But in this case, it comes with a substantial specification upgrade. 8 gigabytes of RAM and 256 storage, a major step up from the 4 gigabytes and 32 of the A10. It's also powered by the MediaTek Helio G99, which offers much stronger performance overall. So while the price increase is noticeable, Acer is clearly repositioning the Iconica line from a basic budget model to something more capable of multitasking, streaming, and some light productivity. And finally, looking at OnePlus, the OnePlus Pad 3 saw a significant $150 price increase, now starting at $700 compared to $550 for its predecessor, the Pad 2. That's a pretty sizable jump, and while OnePlus hasn't radically changed its positioning, it's clearly nudging the Pad lineup further into that premium space. It does feature a larger 13.2-inch 3.4K display, as well as the Snapdragon 8 Gen 3 Elite chip and a 1200 milliamperage battery. This does still is a great budget buy, but again, pushing up to that $700 mark is very getting close to a more premium option as opposed to its predecessor at the $550. How does this compare to what you're seeing for the notebook refresh, Avery?
Thanks, Nick. Similar to what Val has been seeing with printer launches, this spring refresh has been slower than some recent years, but there's still a couple clear through lines. First, a lot more Copilot Plus, with more than a third of new SKUs in the in-store channel at Best Buy and Costco being Copilot Plus. We've also seen that segment expand its footprint to office supply stores with Staples this year. These debuts have primarily come in the form of new notebooks with Intel and AMD processors, as opposed to last year's Qualcomm models. Now, on the Chromebook side of the market, in-store portfolios are clearly moving more toward Chromebook Plus models, especially at Best Buy, and slightly more premium SKUs. We're likely to get even more premium models at Google's upcoming showcase next year, which I would expect to hit the channel in time for the end of the year. When it comes to gaming, however, supply remains tight as the industry deals with a perfect storm of tariff price increases and limited supply of NVIDIA GPUs right now. Open Brand has yet to observe a major influx of new gaming notebooks in stores, while the online in-stock percentage of many new RTX 50 SKUs remained lower than usual for most of the first half of 2025. However, we have seen improvements in recent weeks, and more importantly, NVIDIA announced during its most recent earnings calls a record gaming revenue, which suggests that gaming inventory will substantially improve before the end of the holiday season. We've also seen some smaller Windows brands gain in-store visibility this year amid uncertainty and merchants being less willing to commit to big refreshes. For example, Samsung was able to gain in-store displays for its Galaxy Book 5 models at Best Buy over a month before the main refresh. Additionally, LG gained its first in-store display at that merchant this year. Finally, the PC industry is coming off a very eventful May with events like Computex. Even if that event lacked a big tentpole announcement, we still did get several new 14-inch notebooks from multiple brands, suggesting that thin and light consumer and gaming models, particularly premium ones, will keep gaining steam later this year.
Nice. And some of the most interesting debuts for CE are also thin and light, Avery. Samsung's Galaxy S25 Edge, debuting as its slimmest smartphone yet at 5.8 millimeters thin. Starting at $10.99, the thin handset is featured with aggressive launch promotions, including trade-ins that AT&T, T-Mobile, and Verizon that are actually making this device free or almost free. They're even accepting broken phones. This thin device trend is something that Apple's actually going to embrace this fall with its iPhone 17 Air, expected to replace the underperforming Plus variant in the brand's lineup. And it'll probably even be a tenth of a decimal place thinner than Samsung just to keep that rivalry escalating. And also regarding Apple, we've got a new lower cost iPhone 16e out here, rekindling my favorite part of Apple's portfolio, the budget rung. It's super strategic. At $599, the iPhone 16e brings upgraded performance and, more importantly, brings Apple Intelligence down to the entry-level model for the first time. And of course, there are aggressively priced Android models to answer. Google's new Pixel 9a has a strong emphasis on AI also, and a new redesign while maintaining a competitive $499 starting price, unchanged on year. So a lot of motivation to bring AI to the masses here. And being thin or powered by AI ain't nothing new for TVs, though. What is new is all about brightness and precise dimming. This specific strengths of our newest mini LED TVs. This segment is diversifying and the tech is cascading downward into lower price tiers and portfolio rungs. TCL has really impressed me with its vigor thus far. And you can't really talk about TV quality without talking about OLED. And this is another interesting area of diversification to watch for TVs this season as the outbound 2024 OLEDs drop to record low levels and the 2025 reinforcements roll in. So what are some standouts that you're seeing over there in OPE, Adrian?
Interesting stuff, Scott. Within OPE, 3 themes really stood out this launch season: autonomous mowing, battery platform expansion, and a push for higher battery power. Autonomous mowers are clearly gaining investment, both in terms of new launches and expanded segmentation. This year, we've seen multiple autonomous mower releases for residential use from brands like Husqvarna and Greenworks, but there have also been introductions for commercial applications, including from Exmark, John Deere, and Mean Green. While adoption may be slower for commercial application, the investment we're seeing in the space tells us that manufacturers see a future growth opportunity here. Battery ecosystems also continue to be a central story. Most major brands leaned into platform loyalty, whether through new tools, cross-compatibility messaging, or bundling strategies like we saw reflected in Memorial Day promotions. And we're seeing brands highlight power improvements more than in prior years. Voltage runtime and torque are being emphasized as key proof points. That shift suggests growing confidence in battery performance as a mainstream alternative to gas, even in heavier duty use cases. Taken together, these themes reflect where brands see growth potential, but they also hint at where competition may intensify over the back half of the year.
Speaking of the back half of the year, Adrian, so far we've covered what's happening this spring, but now it's time to turn the corner into the next season of opportunity. As we head into summer and fall, brands are already planting the seeds for the next big retail moment, back to school. From printers to laptops, the second half of the year could be fertile ground for new launches, sharper promotions, and critical pricing shifts. But before we get there, Adrian, let me turn it back over to you to close out OPE and tell us what's ahead.
Thanks, Val. To close out OPE, here are some key takeaways to keep in mind as we head into the second half of the year. We've already seen tariff-related cost pressure driving pricing action, and that's likely to continue. As brands work to preserve margin, we can expect additional price movement in select categories, particularly where cost pressure hasn't fully flowed through to shelf yet. But these price changes won't be uniform. So far, net pricing has moved up in handhelds and walk-behind mowers, but we've seen softness in high-ticket segments like riders and ZTRs. If those trends persist, we may see deeper promotional activity or even assortment shifts in those categories to manage demand and inventory. On the promotional side, brands are signaling a more disciplined approach. Value-first tactics like battery bundles and free gifts are taking precedence over broad-based markdowns. That strategy will likely continue through summer, especially as brands balance volume goals with rising costs. We're also seeing a more selective approach to discounting. Categories like robotic mowers and generators are getting the deepest cuts, which likely reflects both inventory positioning and slower than expected sell-through. We'll be watching to see whether that precision holds or if competitive pressure forces broader discounting as we head into fall. And longer term, product strategy is pointing toward battery ecosystems, performance gains, and autonomy. Those are the areas where brands are placing their bets and the ones that are most likely to support pricing power and loyalty in a more competitive landscape. So while spring gave us an early read, the second half will test how durable these strategies really are as cost pressures continue and consumers grow more value conscious. It will be more important than ever for brands and retailers to align on pricing, assortment, and value strategies. Now let me turn it back over to Val to talk more about what the rest of 2025 has in store.
Thanks again, Adrian. So for the printer categories, back to school has typically been a reliable period, particularly in the brick and mortar channel and especially for entry-level desktop printer models. These are critical purchases for families with students or recent grads heading off to college who may need a printer of their own. Historically, this has been a go-to season for volume and value with promotional activity ramping up. But in recent years, starting with the pandemic, that rhythm has shifted. Disruptions from the pandemic, supply chain constraints, inflation, now tariffs, have all contributed to a more volatile and unpredictable promotional landscape during the season. When we look at the data, we can see that while average discounting levels have remained fairly steady in 2025, we still haven't really seen a breakout moment. In fact, the number of instant savings promotions dipped in Q2, with May counts only slightly higher than April, which could be a sign that brands may be holding back. For shoppers, that could mean a quieter back-to-school season when it comes to savings, and with tariff-related cost pressures pushing prices up, any promotional activity we do see is more likely to be moderate, with brands rolling prices back to pre-increase levels rather than driving them down further. That still brings perceived value to consumers, but the overall deal environment may feel more reserved than in years past. So as we watch June and July unfold, all eyes will be on how brands respond, even in categories like printers where back to school used to be a consistent win.
Speaking of responses to the ongoing macro environment, OpenBrand has closely been monitoring how merchants are navigating the uncertainty. And when we're looking at notebooks and tablets and really the broader computing space, Walmart has seen an increase in draw rate. To take a step back, draw rate is a key metric that a lot of our clients track in our mindshare survey. We asked shoppers what brands and merchants they considered before making their purchase, and from those responses, we're able to determine what percentage of shoppers considered a particular merchant each quarter. With Walmart, that's the solid blue line on this chart, they've seen a steady growth in draw rate and essentially interest in computing shoppers in recent quarters. In Q1 2025, when you're looking at the specific computing categories, continuing this trend, likely in part due to the store's broad portfolio across category and traditional image as a big box store with everyday low prices. If a shopper wants to buy a tablet or notebook, but is anxious about the clock ticking on the price increases, they might choose Walmart's consistent pricing instead of trying to align their purchase with another retailer's sale period.
Thanks, Nick. To transition to what we see more specifically, what we've seen in the tablet space during spring is that Walmart saw the smallest year-over-year increase in its average reported ASP on tablets of around 12% to $333. Best Buy remained competitive and also increased by 12% year over year, but still holds a much higher ASP of $783. Amazon and Apple both saw much larger increases in ASP of 20% plus due to Apple's increased premium placements, driving up the average, as well as Microsoft's premium options at Amazon. For notebooks, we've seen slightly more premium models join Walmart's portfolio as Intel Core Ultra SKUs filter out into more mainstream merchants. And additionally, Apple's MacBook Air at Walmart continues to put pressure on Windows brands, both when it comes to assortment as well as pricing and promotions. Similar to Walmart, OpenBrand has also observed an increase in shoppers considering Amazon for these purchases compared to previous years. But on the flip side, brands traditionally viewed as premium, your Dells, your Apples, have seen decreases in consideration by customers. Looking ahead, we do expect these trends to pick up steam if consumer confidence continues to flag, and especially if further tariff price increases impact the retail channel. For Walmart, this is a big opportunity. It's been steadily moving its computing assortment up market in recent quarters to more closely resemble a Best Buy or a Costco. And if they could leverage that appeal and the leverage and power that comes with their high unit volumes to keep a lid on prices for shoppers, there's a lot of synergies for them to reap from these two trends, both in market share and margins. So Nick and I, we're both really looking forward to our next release of mindshare, and draw rates next month to see if this momentum continues.
Well done, gentlemen. Thank you very much. And we've heard a lot about unpredictability today. Looking into the future, for CE, I'm looking toward those predictable marquee sales events in the year And that's when shoppers will be connecting with deals. I'm talking Prime Day, Black Friday, Cyber Monday. We know when these are coming, and consumers do too. These are going to be the motivating events. And in recent years, we've had this perpetual creep up of the holiday season, leading to total discount saturation in the weeks and even months ahead of Black Friday. You know what I'm talking about. And following these great points about back to school that were just made, maybe we're going to get a break after all that, a retreat back to the predictable, less spillover. A lot of the pressures we've talked about today lead me to think that we won't have the stamina for it outside of these key events. I guess the fall Prime Day will tell us for certain. And for TVs and much of CE, one predictable constant is that the highest percentages of purchases will still come as duress or replacement purchases. The old one broke, right? So in order to get people purchasing new ones outside of this necessity, the future is going to be all about ultra large sizes and art-focused models. That continued lifestyle alignment is what I'm anticipating and looking for. And maybe what's needed to get those wanted a new one and wanted an additional one numbers up on this slide. And now for smartphones, watch out for that iPhone 17 Air that I mentioned. And more importantly, a major shift actually to Apple's launch cadence. They're staggering it now. Apple's core lineup will debut in fall 2025. Then a secondary spring 2026 launch will bring the step-ups, giving Apple a higher stake in the spring refresh for the 2026 cycle and I guess ahead. So Val, tell us more about what else lies ahead.
Yeah, absolutely. Thanks, Scott. And thanks everyone for all of these great details. So let's go ahead and zoom out and talk big picture about what's ahead. As we move deeper away from spring, a season of change, it's clear that the US economy is undergoing a transition of its own. According to our chief economist, the economy is shifting from a post-pandemic recovery to a slower, more fragile expansion. And while consumer demand is still holding up, risks are mounting as we head into summer. These include escalating tariffs, renewed inflation shocks, tighter financial conditions, and uncertainty around global growth. Among these, tariffs remain the most influential near-term factor. Some sectors saw a temporary lift from front-loaded inventory activity, but the broader impact is negative, particularly for import-heavy and capital-intensive industries facing rising input costs. Looking ahead, trade policy will continue to drive volatility, and internal planning should account for both the potential for stabilization and the possibility of further disruption. So as the economic season continues to shift, the key takeaway is this: stay flexible, but stay informed. Just like the seasons, the landscape is changing, and we're here to help you grow with it. Our team of analysts, our chief economists, and a wealth of data-driven insights are ready to support you. So with that, let me go ahead and pass it over to Stacy. I think you're having a slight audio issue, Stacy.
Thank you. Thank you, Val. Thank you to our team of analysts, and thank you to the audience who has joined us today. Feel free to drop your questions in the Q&A if you haven't already done so, and we'll do our best to answer as many of those as time permits. Before we get started, I'd like to highlight an opportunity for those of you in attendance today. As a special thank you for joining today's webinar, we're offering a limited time custom brand report. Please scan the QR code seen on the screen here, or email us directly at winshare@openbrand.com. to request your personalized view. So if you have a question that's been keeping you awake at night, or need a better understanding about who your top competitors are, how pricing shifts or tariffs are impacting your specific category, or any other business questions, scan it now to get started. I'm going to actually welcome our team of experts onto the stage, as well as our chief economist, Ralph McLaughlin, to join us with any potential questions that might pop up here. And I'm going to kick us off with one question that has been on my mind throughout the session today. I'm going to post a poll for you to look at. So we're all consumers, right? All of us work in the industry, and we see how consumers are being impacted by these tariffs. But as consumers, how are they impacting us? Are we delaying purchases? Are we buying earlier as people in the industry?
Yeah, Stacy, I'll take that one because for me, I am a gamer, so I'm looking to upgrade my desktop. So I'm trying to buy a new GPU this year, and it's a bit of a challenging game, right? Because usually the longer you wait after launch, right, you'll get slight discounts as inventory improves and everything like that. But this year for computing in particular, it's one of the most exposed categories as far as tariffs and just things that are made overseas and not really made domestically. So it's a bit of a challenging waiting game. So far, I've been waiting, hoping it doesn't, hoping that prices come down. But there are a couple key deadlines as far as just, broader tariff regulations, as well as some exemptions that the computing industry has benefited from in the past couple of years. That come July, we'll see whether those things go in favor of, consumers, or maybe it might be time to buy sooner and just bite the bullet.
Great. Thanks,
I can
Avery.
chime in.
Sure.
I can also chime in. I think Avery really hit on an interesting point and why it's such a cool thing for all of us representing different categories to be in this call, is that appliances seems to be a different game, right? I would love to wait until Black Friday to see all those great deals roll in November, but as we know through our mindshare data, appliance purchases are really driven by replacement and something broken. So how long can you live without a fridge, right? So I am hoping that all my appliances hang on until I can get a really good deal in November, but demand is demand.
How about purchase earlier? Anybody here purchase something earlier that they didn't plan on as a result of tariffs?
I actually did buy a couch. I didn't need a new couch right away, but we weren't really happy with our old one. And I was like, maybe I'll just go ahead and order this couch now before things get more expensive. So I'm happy with my purchase as well.
Awesome. Well, we have a couple of questions actually for you, Adrian, if you don't mind staying on the stage. What we have here is, let's see, for walk-behind mowers, have you seen a difference in price increases between battery and gas-powered models?
That's a great question. Yeah, we have. So both categories, cordless and gas-powered walk-behind mowers, we have seen both increase, but the cordless models have increased at a higher rate. So we've seen about an 8% increase for those cordless models just in the last, probably since mid-March, I would say. And for gas models, it's about 4%. So we are definitely seeing more acceleration in the battery-powered models, which isn't surprising given the supply sources for a lot of those batteries.
Great. I have an HA question for you, Bryce. How do you see home appliance prices trending in light of tariffs?
Yeah, that's a good question and a very important question to answer. We have noticed some brands elevating shelf price while keeping discounted price about the same during these promo periods. So not only Memorial Day, but President's Day and other kind of retailer discount periods like Lowe's Spring Fest and Spring Black Friday for Home Depot. So I believe that in this kind of waiting period, that those shelf prices gap will allow these manufacturers the flexibility to increase prices as tariffs come in, while still advertising some type of discount. I think that overall prices will probably end up ticking up month over month, but those key promo periods, as I mentioned, Black Friday and in November is when we see those prices dip. So I do think that prices will tick up, but not to a point where it's unheard of. We are seeing year over year changes, but we see prices as well being comparable to 2023. It is an uptick relative to what you were used to, but nothing that's historic.
Okay, great.
And
Thank you.
I'm happy to add a little bit to that, the 30,000 foot view, not just on appliances, and what Bryce said was right on the money, but from a 30,000 foot view with respect to prices across all different categories. The inflation environment that we're in now, everyone's worried about inflation and prices going up, and we're certainly seeing some of that. I think it's important to take a step back and look at the broader picture. Over the last 3-4 years, really since the peak of the COVID price spike, prices have been coming down, right? Everything that caused prices to go up during the pandemic has pretty much gone away, like, really restrictive supply chain issues, shipping restrictions, spread of disease and panic, that's all gone away. So those forces are still in effect. At a point, those downward forces are still in effect at a point when the impacts of tariffs are starting to kick up prices a little bit. So I think we should expect that as the impacts of tariffs start to wane, that the downward forces in prices will hit. In fact, for some price categories, we're only expecting growth by say 2% or 3% over the next 12 months, and in some cases we're expecting flat growth over the longer horizon. So I just provide some additional context there.
Thanks, Ralph. Last couple of questions are focused on CE and TVs. Let's see. What tailwinds are you seeing for computing this year? Avery, Nick?
Thanks, Stacy. Aside from the traditional 5-year refresh cycle, which was now almost 5 years after COVID, I think the two tailwinds we're seeing really are, one, the less interesting kind of mundane one is Windows 10 end of life, and that pushing some upgrades, particularly on the commercial side. But also the other tailwind I think we're going to see probably toward the end of this year and maybe in the next year as well is AI. The industry itself last year, it was about just saying AI, slapping it on the price tag, on the product name, not a lot of details as far as why you should do this or how you could use it. But coming back from Computex, a lot of the discussion there was about you could be more productive, you could be faster doing this, save time, just much more practical applications. I still don't think we're quite at that tipping point, but these are really important steps to get there. Nick, what about you? What are you seeing for tablets?
And I'd say that kind of dovetails off into, for the tablet space, again, having these AI pushes, notably, Microsoft having some on their Surface Pro tablets, does help kind of push them more into a competitive space, sorry, Avery, against the traditional computing categories of laptops, where people are seeing tablets as more of a viable option, especially in those premium sectors, as I talked about earlier with Apple as well as Microsoft, kind of having these really good 2-in-1 options that offer consumers a more flexible computing environment for them to have a smaller, more agile thing to take with them, but still has all the compute power that you would need to be productive. With notably, of course, also in recent time, we just saw the WWDC with Apple launching its new software, which was a really big one for tablets. Now actually having basically a similar operating system to Mac, allowing for, minimizing tabs and stuff and actually reorganizing your screen, which is a huge upgrade for people who wanted kind of that more Mac feel on a tablet. Again, narrowing the gap for what people have historically considered, this is a tablet OS versus a laptop, really kind of just making that much more fluid and easier for consumers to kind of alternate between the two or use a tablet as their main compute source.
Great. Thanks, Nick. Avery. So we're just about out of time. I'm going to hold the last couple of questions, and we will actually respond via email to those of you that submitted a question today. Just a reminder, the video should be out no later than Friday, end of day, and we will send that to everybody in attendance today. As well as please take the next minute here to scan the QR code and request that analyst report so you guys can all dig into and partner with our analysts to uncover some of those insights that you have questions on around your categories. So thank you to everybody joining us today. Thank you to the analysts at Open Brand. We appreciate all of your insights that you've shared here today.